Hello and welcome to our autumn briefing series on the Scottish housing market, looking at how the market has performed over 2020 with a particular focus on the market since lockdown ended in June this year. There's a lot of analysis within the briefings papers, and I just want to draw attention to a few of the kind of the key slides. This looks at cumulative transactions in Scotland over the course of 2020 and comparing with 2019, and we can see that over the course of the year, housing market activity is down about 35% on where it was in 2019. It started off the year at roughly the same rate as sales in 2019, but then when lockdown kicked in at the end of March, there was almost total collapse in market activity. Then there was a kind of a rebound once lockdown ended in particular, but it's taken to September this year before we're back at the kind of monthly levels that we had in 2019. So the cumulative effect of this loss has been 35% over the course of the year to the end of September. We would expect that by the time we get to the end of the calendar year that there may have been a bit more recovery, but we're still likely to be 25 to 30% down in house transactions in 2020 compared to 2019. Looking forward, this drop in activity levels is within our forecast here. So our mid forecast, we've got optimistic and pessimistic forecasts as well, based on varying levels of economic recovery for the next 5 years. But our most likely forecast is this grey dotted line, and the drop back in activity levels over 2020 and then into 21 is clearly observable, and then we think that the recovery is going to be quite gradual from this point, in line with Bank of England economic forecasts, getting back to 2019 activity levels by around 2023. And on house prices, I think, as we correctly anticipated at the start of the pandemic and in our spring briefings just after lockdown started, the main hit is going to be on transaction levels rather than prices, and prices have generally held up over 2020 to date. In fact, have gone up moderately. We think there might be some minor correction over 2021, particularly if recessionary conditions start to bite again, but then a kind of a gradual continuation of this slowly increasing average price levels. We think that's what we'll be experiencing over subsequent years. So 11% growth on a 5-year basis is really very similar to what we had over the previous 5 years from 2015 to 19. I hope you enjoy the series of briefings and find the analysis insightful. Thank you.